morning, everybody, and welcome to the Wednesday, February 18th issue of the Tucson Mortgage Weekly. I'm Todd Abelson. Hope you had a great President's Day. Recording this a little late because yesterday it was just wild and crazy coming back in the office after a 3-day weekend, even though I worked most of that weekend. Still, lots going on. So anyway, here's a quick analysis. You've probably been tracking rates, whether it's through me or through other lenders, through newspapers, whatnot, and notice that rates clearly were at multi-year lows in January. In fact, we got a huge improvement in rates as the price of oil went down, as the stock market was having a pretty tough time. And ultimately, we were able to capture a lot of that low rate for a lot of people. Sent out a lot of emails, called a lot of folks, and then suddenly the market turned around. Now, we're wondering, a lot of people are calling and wondering what the heck happened, because it happened really fast. The market has already given back all of its gains that we got, that we enjoyed in January. And now people are wondering, well, is this like the beginning of the end? Well, ultimately, the two things to look at is the underlying market conditions really haven't changed. There's really still no signs of inflation. Reports are coming in showing, for example, that inflation at the producer level is down year over year. Capacity utilization and the manufacturing facilities is about the same or down. So there's not anything really strong changing wildly in the underpinnings of the economy. What has been changing, if you've noticed, is two things. First of all, the stock market's been on a tear for the past 3 weeks. The S&P is up, probably close to about 100 points in the month of February, which is a huge gain considering it's only 3 weeks. And at the same time, also take a look at oil. It's gone from 40-ish to 60-ish in that same 3-week period. So as stocks are on a tear, as oil's been coming back, we're seeing interest rates kind of giving it away. Now, let's also not wipe out what's going on in Europe. There's still a lot of uncertainty over the Greek economy. And so realistically, what we're going to be looking at is what's happening in the stock market. There are some very important and smarter people than me saying that the stock market's overbought and it's going to turn around and give some of it back, and we may very well start seeing lower rates again. Watch the 10-year. It peaked over that very peak level of 2.02% and then just went up to 2.2. So realistically, or I should say 2.14%. So bottom line is watch those numbers and see. But right now rates are higher than they were a month ago. They are still excellent. And the prognosis is watch what's going on in the stock market. If it takes a break that people think that it's going to, then we're going to see some reduction in rates. Don't forget to check out the blog site. There's some new things going on in the appraisal market, which I'm sure we've already talked about. Some changes happening on Fannie Mae. So you want to be up to date on that. If you got any questions, give me a call here. Todd Abelson, Sun Street Mortgage in sunny Tucson, Arizona. Make it a great week. Bye-bye.